Yeah. What's up, everybody? Happy Wednesday. Welcome to the morning show. It's the best morning show in finance. I'm Spencer Israel, joined as always by JC Parets and Steve Strazza. Let's see what's on the docket today. It's a Fed day. Wouldn't you know it? We got an FOMC thing today at 2 o'clock. So we'll have John Netto on to preview that. That'll be in about an hour from now, though. Before that, we'll be joined by Kimmy, Sokoloff, and Mike Lee, founder of Mike Lee Strategy. If you have any questions, any tickers on your mind, drop them in the chat. Now is the time to do that. And let's roll my intro and get JC and Strazza on to the show. Like I said, it's the morning show.
What up, Mr. Strazza?
Hey, guys.
I like the shirt. Rocking the All-Star Charts gear. Always.
Very consistent.
This is look. This is the Stock Market TV t-shirt you're wearing. This is where Spencer took our All-Star Charts t-shirt and turned it into a Stock Market TV t-shirt. He goes, we're going to change it from Eat, Sleep, Chart to Eat, Sleep, Trade and totally steal that. So that's what happened there, in case anybody's wondering, Strazza.
I like Eat, Sleep, Chart more, but I get it.
Of course they do. You totally butchered it, Spencer.
I like my shirt better, but all right.
Seriously, you totally fucked this one up. Just come up with your own material. Jesus.
If I had more than an hour to do it, I would have. All right. State of the markets. Let's do it.
All right. I can't help but think about. I mean, am I obsessing over this? Throw up the bonds technology chart. Am I overthinking this? The fact that this is what I'm thinking about as I'm drinking old fashions, on the water, staring at the bay of the Jersey Shore. I'm thinking about, man, why bonds suck in the face of these rising, ultra resilient technology and large cap growth, and bonds just don't care. Do I care too much, or should I be like, listen, bonds don't care, so I don't give a damn? How should I take this?
It's strange. It's something we have to continue to monitor, right? It would make sense for rates to come down here, bonds catch higher to technology and all these other long duration assets.
How come they're not then?
What?
How come that's not happening? How come bonds are diverging so dramatically?
Yeah, all year.
Huh. And then what's interesting is that twos, right? Twos have really been moving lately. That's interesting, right? Do we take that strength out of twos, as a leading indicator, as it's been? Hasn't it been a good leading indicator?
Yeah, but it's
for the rest of the curve.
You're saying twos moving higher is telling us something about what the Fed's going to do today?
Not so much what the Fed's going to do today as maybe short-term rates do for the rest of the year. Maybe not necessarily today. Aren't Fed fund futures pricing in like 93% chance of a nothing burger? Like that's pretty good odds. No.
So it's what they're telling us about July then, which we.
All right. We'll talk about that with Netto. I just want to throw it out there because I'm still thinking about it, and I'm really curious to see how this resolves. The strength in twos. I mean, man, it's nuts. Okay. How about the another fund manager survey chart?
Oh God.
Why are you hating on fund manager survey?
All right.
Why are you hating on the fund manager survey? Tell me.
Fine. What do you got here?
Why are you like grunting when I throw this chart up? Why? It's below your line? Like, are you too good for this?
I mean, what, are you going to tell me this means something about credit spreads?
No. Has nothing to do with credit spreads.
Investment grade over high yield? No.
Investment grade over high yield. Well, it's not so much credit spreads as it is I guess technically you can argue this is in the credit spread world, but all it means is that investors are looking for safer bonds as opposed to more aggressive bonds at a rate that we have not seen since March of 2009. I don't know if you know what happened in March of 2009. It's kind of a big deal, in American history. You know, it's up there with, you know, maybe the Declaration of Independence, you know, maybe
Big bottom.
kind of a big deal. Kind of a big deal. I don't know. Listen, where does this fit in the whole scheme of things? It makes perfect sense, doesn't it? Aren't low volatility stocks hitting new 52-week lows? The VIX is at new 3-year lows. Staples continue to underperform. Utilities, you know, anything defensive has been. We just hit new 52-week highs in high beta versus low volatility. New 52-week highs in consumer discretionary versus consumer staples. So isn't the fact that money is moving faster into safer bonds versus more aggressive bonds just kind of more of that story? Like, isn't just right?
My problem with that sentiment survey is that it's telling me something a lot different from price, right? So when I see that, I would say, okay, I want to look at high yield bonds versus investment grade bonds. So you could do something like HYG, LQD, right?
Yeah.
Great. It doesn't look like that it's, you know, investors on the most underweight high yield that they've been in 15 years at all. When you look at that ratio, high yield's been outperforming steadily for several years now.
So doesn't that tell you? So the fact that price is already moving in one direction while sentiment is still extreme on the other side.
I just, you know, this positioning stuff, who knows? Maybe that's true.
Doesn't it create potential unwind in the same way, like short interest, for example? Coming into the year, we're making a big to-do about all these stocks with their short interest. It was absolutely out of control, right? Remember, we were like, oh, the short interest is out of control. We got to be buying these stocks. And a lot of those have worked out, obviously, tremendously, not because the fundamentals have dramatically changed. It's because of the positioning. And we were making the point then, and I'll make it again now, that just because there's very high short interest doesn't necessarily mean we want to buy the stock. Doesn't mean the stock's going to go up. What it means is if the stock starts to go up, there's a catalyst there to really swing that very aggressively. So I feel like looking at price already moving in one direction while sentiment in the bond market is still aggressively positioned otherwise, doesn't that create a further catalyst where you were just pointing out the fact that high yield bonds have been outperforming the investment grade bonds? Doesn't that add more tailwind?
I get what you're saying. I mean, look, none of them look good on an absolute basis, so there's room for higher prices here. You know, considering like something like high yield's been falling consistently for almost 3 years now. You got a nice base trying to shape up there. We'll see. The other important thing to remember is just because somebody says they're positioned a certain way in a survey doesn't mean that they're actually positioned that way in reality. So,
well, they're also not. They're also it's also anonymous, and they have no incentive to lie. Just saying. Okay. Anyway, so what are we doing about all this shit, right? Who gives a damn, right? This is where Sean comes in, like yawning, like, oh my God, these two with their fucking credit spreads. Can we get to the damn trade ideas, right? And I appreciate that from Sean. And a lot of people come to us and they're like, JC, we don't care what you think about Germany. I live in Texas. I want to know what you think about energy stocks. All right, great. I have no problem with that. And some other people are like, I don't necessarily need the trade idea flow. I'm just kind of interested in understanding the whole context of where we are in this world. And they don't care about the trade ideas. That's great too. A lot of people care about both. They're like, oh, okay, great, JC. You know, the high yield bond market in Italy is, you know, so then we're buying ExxonMobil. Terrific. Let's go. You know. And it's just funny, like talking with like our audience over all these years. I started All-Star Charts as a blog in 2011. It's now 2023. So that was what's that math? Over 12 years ago? I'm in year 13. Ain't that some shit? Strazza was in diapers 13 years ago. What were you doing 13 years ago?
It's graduating college.
How hard you party in college on a scale of 1 to 10?
Not hard at all. I had almost a 4.0 in college.
Stop it. Are you serious?
Yeah, I'll show it to you.
Nerd alert. I'll show it to you. I feel like you have it framed. Like you're such a nerd.
It's on my resume. You've seen it. You probably just didn't read my resume when I sent it to you.
I don't look at resumes. What year is this resume? Get out of here. The way we hire around here, we go grab beers, and if you're cool and you sound smart, you do good work, you're in. Let's go.
That is kind of how we did it, huh?
You know, that's how I got Thomas. Thomas is like our technology guy at All-Star Charts for you guys who don't know Thomas. And then he's like, I don't care what I do for you guys, JC. I just want to work for you guys. What do you need help with? And I'm like, well, our technology sucks. We need a better website. He's like, all right, done. Yeah. So I'm like, okay, fly to Sonoma, right? And my whole plan was meet me at because the Hurricanes were playing UNC. I'll never forget it. Hurricanes were playing UNC. Game started 9 a.m. over there. So I'm like, meet me at this bar at 9 a.m. Let's go. Watching the Canes game in the morning. This Canadian technology kid thinks I'm crazy. And we're just getting banged up. And then, in Sonoma, I have friends that would be normally at the bar that early, on a Saturday. That's just kind of how they roll. And that's another story. And, we went wine tasting after the Canes game. I got him super drunk. And he was the man. He was the nicest guy, as much as I tried to get him like just ripped. He held his own. I was impressed, and he's still working with us. That was 2016, early 2016. So how long ago was that? 7 years ago I did that. That's the way to hire people.
He was employee one. Yeah, I love Thomas. Talking to him.
Thomas is the man. All right. What is moving, my friend? What do we have? What do we have in the move? Can we throw up the under the hood report? I really like this scan a lot. We run this every other Monday, and it's really just a list of stocks that are showing an unusual increase in investor interest. This goes back to Spencer. Do you remember the Robin tracks? Remember that?
Oh, there was a half dozen of those websites back in the day.
Yeah, we had one of them. We had the best one.
Well, we do now. We do now, but we totally stole the inspiration from Robin tracks in the same way that you stole Eat Sleep chart and we turned it into Eat Sleep Trade. The way you did that is kind of how we did this. We saw Robin tracks and they were sort of scanning like the money flow into different stocks at Robinhood, and they were just sharing that. And then at All Star Charts, we're like, oh, this is a great list, right? And then we'd go in there and look for trade ideas. And then one day, I guess Robinhood clipped with the API or whatever it is that happened there. So it was donezo. And we're like, hey, wait a minute, this was awesome. Why don't we just make our own and make it even better?
So where is this data from?
Robinhood. What?
Where is this data from?
This data is, we don't want to necessarily talk about where the data is from. Let's just say, just keep it simple. These are stocks that are showing an unusual increase in investor interest in a very similar way that when Robin Tracks was tracking the change in flow for Robinhood. This is much broader, but same idea. Just think of it like that. More people are interested in these freaking stocks than they were a week ago. Just think of it like that.
We're using.
What I also like about this is it's not just long. This isn't like the young aristocrats or the 2 to 100 club that are very specifically long ideas. This is a great list of longs and shorts, right? So just because a lot more people are interested in this particular stock, Fiserv, for whatever reason, doesn't necessarily mean we want to buy it. In fact, we might even want to short it. So I really like this scan a lot.
Some interesting names on here. Yeah, just we used to offer it to the public through a site when we were just using the Robinhood information. It was ultimately just like what Robin Track had. Then once they cut off that API, now we just do it internally using like a series of different technical indicators that, like JC says, will deliver us a list showing stocks that had the most investor interest.
Strazza, you know what we should do? We should have Brett create like an interface so that all the different scans, like we could just get the whole list and you can maybe export it. If we could do that for the young aristocrats, 2 to 100 club, minor leaguers. I mean, why not? He could do it. I can't.
Or there could be like an icon in rangefinder, right? Like if you were in the top 10 of Under the Hood this week, maybe a little Under the Hood logo pops up.
I know, but how are you going to classify the top 10?
What do you mean? We got them listed out right here. It is quantified.
This is sorted. Okay, I thought it was a random 60 all along. Okay, I learned something new today.
We could rank these totally. Yeah.
Okay.
Yeah. There's a score.
I guess you know what it is? I personally don't care about the rankings. Maybe that's why. I really don't care at all.
No, but we have to quantify it somehow. Like there is a number. There are numbers behind this if we had to.
Right.
Care about it either. No.
Yeah. I guess for me, I didn't even, maybe I did and I just forgot about it because I don't care. I really don't care at all. Kind of like if you want to throw up the hot corner. Actually, let's get into the hot corner because I want to talk about this list and why it's important. You want to hit it, Spencer?
Hold on.
What do you
mean? Hot corner. So hot right now.
So the reason, throw up today's. The reason I wanted to bring this up in this conversation with Under the Hood is once it's on the Under the Hood list, I don't care how it got there. I just care that it's on there. Same as these. Like, it's cool that this dude, Ryan Cohen, is that the CEO? Who's Ryan Cohen?
He's
No.
running the company now. He's the executive chairman. Yeah, yes.
Okay, the fact that he bought $10 million, like that's great. And the fact that this other guy, or let's say it was a senator, bought lumber futures, right? Like Tommy Tuberville's buying lumber futures again or whatever. I remember he was doing that. I don't care whether it's a Form 4 or a 13D. It's just a list of ideas, right? So I look at it the same way, Strazza. Do you feel that way, or do you still lean towards that old argument that you and I used to have about if the CEO is buying, the CFO is buying? Like, does that change anything for you, or is it just get down to the better risk reward?
Yeah, these aren't all, like, not all insider filings are created equally, right? Like, we're looking at these things too closely for me not to say, in this instance, that the GameStop filing yesterday is a lot more significant than, say, the NRGX filing from Saba Capital Management.
Why? Because of the money? Because $10 million versus $500,000?
This fund, they're probably huge, Saba Capital. They didn't even buy $1 million worth of stock. I'm sure that they have a position. I could pull it up and check right here what their stake is. But it's probably not a new purchase, right? Something like GameStop, this is fresh. Ryan Cohen's back. I mean, this is big. It does matter who it is, right? Like if Jamie Dimon was out here, making a $20 million purchase in JP Morgan stock, that's a bigger deal than some random director of marketing buying $100K of some biotech. So, like, we do pay attention to some more than others, of course.
I guess I don't. You're not fine. Like, I get it's more significant, but am I going to put a bigger dollar amount, or am I going to be more inclined to put on a trade?
No,
or does it just, for me, I won't.
It still comes down to the chart, right?
Right.
That's what you're saying. Like, at the end of the day, it still comes down to the chart. Of course, everybody knows the big example on here since last year is Oxy and Warren Buffett. Like, that one, from a filing perspective, there wasn't better filing information that we had, right? That there was something bullish going on behind this stock with a big institution buying, and we knew the level, right? But guess what? It still never went on to hit our target, right? Like, we can't make the chart good. We can't make the stock go up just because there's an insider in it.
No, Silvergate, remember, and you could take this back to the short interest scans that we're doing in January. Silvergate had 80% short interest. It went to zero, right? So, like, that's not our problem. But then Carvana, the vending machine of cars or whatever, went up 1,000,000%, right?
Yeah. No, so we also have throw back up the hot list. Sam makes a funny comment here. Is this you buying DraftKings calls? No, actually, Sam, that wasn't me yesterday. I already have my DraftKings calls. In fact, just like
I think he knows that, which is why he's breaking balls. I think he knows that you're
expire Friday. But we also include
you're in the money, so you have the DraftKings calls that expire Friday?
Yeah.
So you're in the same position as me, junkie. You're making fun of me because I got
Yeah. Well, I didn't buy them just this week like we did with the Shopify calls. And I know you didn't either with Meta, but yeah, I got to manage it my
Throw
way.
up the Meta chart. Throw up the Meta chart with that 300 target, Fonz.
Oh, let's run the bumper and talk about the analyst moves now. I wasn't done.
There was an analyst move in the Meta, right?
You gonna let me do my segment and finish the hot corner?
Knock yourself out, bro.
Because there's two other stocks we should mention on here today.
Okay. What do you like?
Throw it up. We got Advanced Auto Parts. We've had multiple purchases here just in the past several days. AAP. This chart looks really good. Oh, wait. No, it doesn't. Oh, I'm sorry.
No, the other ones. The AAP is the one that doesn't. It's O'Reilly that looks good.
Right. So
and the other one.
It's in that group where it should look good. They keep coming out and buying.
Diverging.
Yeah, this one looks terrible. It's below its 2018 lows and 2020 lows. But this is what we tend to see.
This is one of the examples that I gave in the conference call last week that we had, the monthly strategy session. One of my examples of correlations coming down, in fact, right? In times of stress, high volatility, correlation spiked to 1. And as we see the correlation among S&P 500 components really coming off, on a rolling 1 month, 3 month, 6 month, 12-month basis, all rolling over hard, making new lows across the board. This is a good example. That's a broader quantified look. The fact that Advanced Auto is underperforming its competitors by so much, I think it's another example of that you're seeing at stock level.
Yeah, so you got to stay away from that one. Is interesting to see insiders keep coming out and buying stock.
Do
And then
people go to Advanced Auto Parts? I don't think I've ever been in any of these stores. Like, people go there?
Yeah, we have one.
JC, some people actually like to work on their own cars themselves,
Got a car.
not just go.
I don't
the
trust
shop.
myself. And then I have to drive the car that I was working on. Zero chance. No, not a chance.
Yeah, no.
No thanks.
One more, amps. This Altus Power. Seeing several purchasers, several insiders in this one lately. This was a SPAC back in 2021. Interesting setup. Is trying to build out a little base here. Probably needs more time, but Steve Schwartzman from Blackstone was actually out here buying this earlier this week or last
Through
week.
Blackstone or on his own?
No,
Through Blackstone.
for himself. Yeah.
For himself.
Yeah.
Oh, wow.
And now we're seeing what directors buy. Throw up the list again. Who was in it today? I think it was a director.
What's the ticker symbol?
Amps.
AMPS?
Yeah.
Amps. And what is this thing?
Utilities.
Oh, it's a utility stock. Got it.
Yeah. Who's William Concannon?
Make utility stock sexy again.
Clean elect.
Hold on. So this is a utility SPAC?
It's a clean electrification company.
They have utility SPACs? That's a thing?
You could SPAC anything.
I suppose. It just seems
Remember
like SPACs, you'd come up with something sexier than a freaking utility stock.
Remember that MP Materials?
It's $1 billion stock.
Yeah.
It's $1 billion utility stock. Doesn't even pay a dividend. What kind of half-ass utility stock doesn't pay a dividend? I guess the kind that SPACs, I suppose. So I guess fits the bill.
Well,
This is probably the best looking SPAC chart I've seen.
No, there's a few. There's a couple.
Remember the MP Materials looked really good for a while. Now it looks terrible. But that was a SPAC. That was a rare earth metal.
I know, but what stock was MP Materials before? It was.
I don't think it was.
It was a different company before, and then SPAC through MP. Did you know a fun fact that I just learned? Hanging out with gold bugs. I hang out with gold bugs now, Strazza. It's kind of my thing, dude. They were buying me. These gold bugs were buying me lamb chops. They were buying me. They're like giving me the wine list. They're like, JC, pick the best bottle. I'm like, are you sure? They're like, JC, pick the best bottle. I'm like, all right. So we were drinking Cornas. We were drinking what was it? A San Josef. Oh, we were crushing it, dude. And eating lamb chops. Oh, it was fantastic. Watching the Heat lose. That sucked. But anyway, the gold bugs were nice. And so, you know what I learned? Because gold bugs are not just into gold. They're into like other dirty things like coal and shit like that, right? Uranium, especially from Canada. They love all this stuff. So anyway, so this is the things that we talk about. And Walter Industries, for you guys who remember prior cycles back in the 2000s, Walter Industries ultimately went under when all the commodities got crushed. That is now Warrior Met.
Yep.
You knew that?
No, I didn't, but you told me yesterday. So I know.
Oh, okay, yeah. Warrior Met. What is it? HHC? Is that the it used to be Walter Industries. Who knew? You know, I used to trade that stock early in my career and it just disappeared one day. That's like somebody telling me like Tesoro is back, right? Like Tesoro used to be my favorite. It was like what?
TSR.
TSO.
Oh, that's right. Yeah.
TSO, Tesoro. It was an oil refiner, and it was like the bellwether. It was like the Freeport-McMoRan of refiners, right? It was like the best bellwether. It was like saying JP Morgan for banks, right? Like that was my go-to name. And then I think it got acquired or something. I think it merged with another company. I lost my bellwether. You know, shit happens, I guess, right?
These commodity stocks, they don't hang around for very long. A lot of them.
Boom and bust, they say, Strazza. Boom and bust.
Can I give you a fun fact before we move on?
Yes.
So the reason why this Altus Power is not going to pay you a dividend, they are very much a new energy company. They specialize in solar, other alternative energy, the electrification of clean energy. And it was founded in September 2013. Can you guess where?
California.
Greenwich, Connecticut.
Stop it.
Mm-hmm. I'm a
classic. Of course, a utility stock SPAC. Of course, it comes out of Greenwich, Connecticut. Not, you know. Okay, bring in Mike Lee. I've known Mike Lee.
No, Mike Lee is not ready yet. Actually, Mike, if you are ready, give me a thumbs up. Maybe he is ready. I don't know.
Oh, we're a little early. Am I rushing us?
JC, you've gone completely out of order today.
What is he on today?
I have no idea. What is up with you?
I'm fired up, man. I'm going to the zoo today. I'm going to the zoo.
You see, you're jumping around like all over the place.
I'm going to the zoo. I'm very excited. My daughter loves the zoo. I'm taking her to the zoo this afternoon. It's gonna be fantastic.
That's not gonna make this show go any faster. You realize that?
What's better, the zoo or the aquarium?
Oh,
wow,
that's tough. Depends what aquarium. What aquarium.
Have you been to the Miami Aquarium in Key Biscayne?
I have not. Do I need?
I used to go when I was a kid.
Should I go?
I'm going to the Cape. I'm going to the Cape May Zoo.
Okay.
They got monkeys. I love monkeys. They got the little ones. They got the big chimps and stuff like that. They got bears.
The zoo is probably better than the aquarium, right?
The zoo is better than the aquarium. Yeah, but you made a good point. Depends on the aquarium, right? Depends on the zoo. Like, man, I've been to some shitty zoos. The zoo in Allentown is the most depressing place on earth. Allentown, Pennsylvania has the worst zoo I've ever seen in my life.
Why did you ever go to a zoo there? Why do they even have?
Because it's only like 25 minutes from my house.
They have a zoo at the sheriff's department here. It's really depressing.
Really?
All right.
It's all the animals that they have to confiscate from Florida men.
Dude, the zoos in Australia are sick. Koala bears are not friendly. They're very mean because I think that they're always like high on like eucalyptus, and then that's why they're always asleep, and then you wake them up and they're pissed off. They're not friendly.
CFLT we'll talk about, guys. I saw some big upgrades for CFLT.
Bring in Mike Lee.
Okay, I am. I'm going to say if you're in the YouTube chat, please participate in my survey, zoo or aquarium, and then we'll talk about the results later. Mike Lee, founder of Mike Lee Strategy. Let's get him on the show right now.
Yeah, San Diego, Bronx.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
There he is.
Mike Lee, what's up, my man?
Gentlemen, JC just had the 20-year at Fairfield U, got back on Sunday night.
How was it?
Too good.
Was a good showing? Did a lot of people show up?
Yeah, unbelievable. A lot of people didn't sign up, so their names weren't on the list, but they got like Airbnbs and were at parties and at the bar. So
hold on. So for people who don't know, Mike Lee and I both graduated from Fairfield University. He's older by a year. Captain of the rugby team. You guys were out of control. You guys were another level.
You know, it's reminded myself of how old I am this weekend.
Let me ask you this. I was just telling Strazza about these crazy rugby players and like the South Africans and stuff like that, and the Kiwis that were coming in. You know, like Providence, I remember, was nuts. What school had the craziest rugby team?
Oh, Providence.
Providence. Okay, so I was right. See how I know?
You know, like there was a strip of houses off campus at the beach on Long Island Sound in Fairfield, Connecticut. If anybody doesn't know about it, we call it the Point. And at the end of the Point, after every rugby game, we used to get a couple kegs and hang out with the other team. The only time the police have been called is when Providence came. Normally everyone that lived there would hang out and it would be very amicable. But those Providence guys are another level.
So you would party with the players that you were just facing off against?
Yes.
Wow.
Yeah, but that's tradition. That's
yes.
It's Fairfield. That's what you do.
You leave it on the field, and then after the game, you hang out, and it's fun. You know, decades later, you're best friends with guys that played against you. So
that's cool. JC, why didn't you go to this reunion?
He's a year older. Mine's next year.
Next year.
Oh, did he have friends in college, Mike, or not really?
Yes.
Yeah. Wow.
I know, shocking, but yes, a lot of them.
We had a good time at Fairfield U. I'm here I'm actually here in the Jersey Shore. I'm in Avalon, and the girl that works at the bagel shop around the corner, she's going to be a freshman at Fairfield. So I was like, oh, sick. So it's really, really cool. Let me tell you something. If you would have told me 20 years ago that I would be live with Maria Bartiromo, with Mike Lee, the two of us, I would have said 0.0 chance. So that was pretty funny. I didn't even know you were going to be on the show with me. So that was fun. You're a financial advisor now.
Yes, I have my own wealth management firm as a registered investment advisor. I like you. I worked at a small firm, then I worked at Merrill, and then I did Smith Barney and then Morgan Stanley for a long time, and then I've been on the independent side of the world. I think you just did some time at Merrill before you set up your own.
I started in Merrill, in Stanford, actually. Going to Fairfield, correct me if I'm wrong, I mean, my interview to work at Merrill Lynch was like, oh, you're on the baseball team. Oh, so-and-so, I play golf with his father. All right, let me introduce you. When can you start? I'm like, I don't know, tomorrow? I got nothing to do.
Yeah. I'm not as well connected. Didn't play baseball, so I had to tell them, well, I'm a really hard worker and a really smart guy, and everybody likes me.
And then how do you incorporate the behavior of the market in your practice now, right? Like obviously Strazza and I are very technical oriented. Strazza is also a CPA, so he likes to dork out with spreadsheets, stuff like that. I do not. Talk to me about sort of your process, how you approach the market.
So, my favorite class at Fairfield was macroeconomics, and I took a bunch of them. I don't know if you, Dr. Lane, I basically took a class in high school. I took a class in high school, been obsessed with it ever since. And so what I look at primarily is the business cycle. And so, and instead of looking at the charts or figuring out fundamentals, I look at price to earnings multiple, expansion and contraction, right? And so, if anybody's seen Varney, he used to call me the Super Bowl, because when you have expanding liquidity, a growing economy, and increasing earnings, multiples get bigger, right? So it's pretty easy to be a bull during that time frame, and that's most of what we had for the last decade. And last year that went in reverse. And my process, it's basically worked since I incorporated it a decade ago, every year except for, say, this year. Because this year, the price to earnings multiples in the last 6 months, the S&P have gone from 18 to 24 in the face of tightening liquidity, slowing economy, declining earnings. That's kind of gone in reverse. And how I apply that to investing is I do sector rotation primarily with the sectors of the S&P 500. I throw in the 30-year treasury into that optimization model. And then from there, I solve for minimum variance and maximum Sharpe ratio over the last year, and then start making forward bets based on what I see in the market. I look at
specific or stocks.
What's that?
Like each sector ETF specific or stocks?
Just sector ETFs with the TLT.
Industry groups too, or just like the XLF, XLE?
Yes, XLF, XLE. Just because you can't really optimize once you get above 12 or 13 assets. I mean,
you're going to buy tech. You're not going to buy SMH or anything like that. You'll buy the XLK,
XLK, XLI, XLB, XLC, and so on.
Sure.
And that's that's worked extraordinarily. The idea is to get 80 to 90% of the upside of the market, with a 20 to 30% less vol, and to really outperform in the drawdowns, because you get an unbelievable negative 1-to-1 correlation with the TLT in times of crisis. So in February 2020, home run, right?
But not 22.
Well, yeah, but in 2022, if you were following my optimization model, I was between 25 and 30% XLE the whole year. So it offset that. So, I beat the S&P 500 by 400 or 500 basis points last year. And in the first 6 months of the year, that's gone. So, because, this AI craze and this kind of bull run that you've been talking about. And so in the back of my mind, I'm like, well, I don't know as much about the charts as JC, and that's voodoo magic. So I'm just going to do what I do. But that's, so this year it is.
Yeah, but listen, at the end of the day, what are we doing? We're looking for trends. You're doing the same thing in your sector rotation model. The reason you were in so much energy is because the trends were up, right? So you're doing the same thing that we're doing. Maybe maybe we look underneath the surface and market breadth in an obsessive way that I think exceeds the work that most people do. Like these days, everyone's a breadth expert, right? I don't know if you noticed, right? Everybody's an equally weighted index expert, right? But the truth is they're not. And I don't want to say that we're experts, but man, we put in a lot of work. So people are like, JC is so confident and da, 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 da. The only thing I'm confident is just how much work goes into the decisions we're making. We put in more freaking work with a better team. Who's got a better team than us, Strazza?
I want to talk more about price to earnings ratio. We have the best team. Of course we do.
Why would you dilute something as factual as price with something as arbitrary as earnings?
Hold on. There's something here. Mike, are you going through and looking like, you said you're rotating among the strongest sectors. Are you looking at the PE multiples on like a sector level and saying, okay, I'm going to buy, value here or a cheap PE ratio and then bet for a run up or some multiple expansion? Or are you literally using like the PE as like a momentum ratio, right? Because PE is the mean rate.
I'm looking at it on a whole of the S&P 500, right? Are stocks cheap or are stocks expensive from a tactical asset allocation model, right? And it's and so when you have really high PEs and like you have all these other things coming into that will contract these PEs, because like these earnings in a lot of ways are subjective and artificial and they're backward looking.
Yeah.
Right. So it's all about this game of guessing where things are going to go. Is that a positive trend? Is that a negative trend? Right. And it's as far unless these big names really blow the doors off in earnings and carry the quarter, like this last one, earnings estimates for 8% year-over-year growth in the fourth quarter are just like outlandish. So that means, right, whereas a lot of like, and the other side is that coming out of COVID, every single quarter coming out of COVID, analyst estimates were too low. Yep. And they were increasingly raised and raised and raised. And that is the first time it's ever happened. The history of analyst estimates is we have these really, really rosy estimates. Mm-hmm. Okay. And then we lower them into the quarter. Right. And then these companies beat these lowered estimates. So it's just the way things have always worked.
After COVID, you're saying they were so depressed that we were actually raising the estimates into earnings and still beating them?
Yes, and that it's the first time analysts weren't positive enough, like in history. Right. And so, and then for me, I'm not like I've been extraordinarily bearish because the history of crushing inflation is very, very recessionary, and the Fed will go until things don't break. And the other thing that we have going on right now is a full-on banking crisis, and it's not talked about because some of the things that the Fed has put in place, but you have a massive deposit flight that's just not stopping. Yep. Because you're getting 0% in your checking and savings, you're getting 5% in the money market. And so while that goes on, it's not the same in 2008 where banks own all these toxic assets, but you can't have a bank without deposits. And if you have a massive deposit flight going out the door, what's that going to do to lending? And then I think prime is like 8.5% right now, and you have this commercial real estate problem. So there's all these massive macroeconomic issues that's saying like there's no way in God's green earth the NASDAQ should be up 30% this year, yet here we are.
So let's talk about the banking thing. JC won't talk about this with me, so this will be fun. You don't think it's over? You think another one's going to come? It looks like now we're going to take a little pause today from the Fed, but then another hike in July, maybe another 25 basis points pushes another bank over the edge.
Well, it's like we're in a bit of a waiting game here. Like how many commercial mortgages need to roll over on random office space in middle America where it's like, you're 80% leased up, but like as those renewals come in, you're going to 20. And so that landlord's got to come up with a lot more capital, okay, combined with like you're just bending. And like things haven't quite broke. And so we just got a great PPI number that came out. We're at 0.2% core month over month. Like that's we're now starting to talk, okay, yes, we're getting close to the Fed's inflation target. But yesterday, people are celebrating, but like 0.4% growth month over month gets you closer to a 5% annualized rate.
Yeah. What's the Fed looking for? Like 2, 3?
Yes. And there's 2. And there's a reason why it's 2 is because inflation is a silent killer. It's not only bad for markets and for the economy. It destroys the fabric of societies. So that's why we have a 2% target. It's not really like arbitrary, like, well, should it be 1 or should it be 3? Oh, let's just split the difference.
Yeah. It's always been 2, and you're saying there's a good reason for it.
Yeah. Like when inflation gets much higher, it's the invisible tax, and it can rip things apart. And I think Jerome Powell, they spent too much money coming out of COVID. Like the Fed did too much, the federal government did too much, and that unwind combined with a whole host of other things put us in an inflationary super cycle. It's always stickier than you can imagine. And if the Fed pauses or cuts and oil spikes, right, PPI is going to go the other way.
Yep.
And that means CPI is going to go the other way, and the Fed's going to have to start hiking again. And again, these banks, these are like, how are you going to hold on to deposits? Like
It's a problem. Yeah. And that's really how these runs start, right? It doesn't get talked about too much, but no bank can really, withstand a bank run. They're just not built for bank runs. So
it's the fractional reserve banking system, right? So they don't have all your money. And what's that? Miracle on 34th Street is like the classic movie where he's like, I don't have your money here. It's in Mr. Jones' house, right? Like so that's where we are. And like, I don't know how cataclysmic that'll get. And the Fed said they can backstop every single deposit. And they've put hundreds of billions of dollars in the market with their temporary liquidity programs. So like, it's like on one hand, you're fighting inflation. On another one, you're printing obscene amounts of money. So there's like massive issues under the surface, but again, the Nasdaq's up 30%.
Yeah, right. So, I mean, basically, what Mike's saying here, JC, is the Fed's in quite the pickle because they're probably not done yet squashing inflation. So, more hikes are warranted, probably. And if we hike, we break more banks. And at a certain point, if banks keep blowing up, it is going to matter.
Well, I don't like pickles, so
pickle. It's quite the pickle.
I give the pickles to my daughter. She likes them. I take them out of my burger.
Well,
what I'm interested in
I went on a Cuba.
is all the stuff that you guys are saying. Like that might be true, and you might be lying to me. I really don't care. I'm mostly interested in the fact that the stock market doesn't give a damn about these little banks that nobody's ever heard of disappearing. Nobody cares. So why on earth should I care? I'm nobody. I am less than nothing in this world. Well, the market, which is the ultimate arbiter, does not care. Doesn't care. So who am I to suggest that the rest of us should?
So what I would say to JC is that there are people infinitely smarter than me that run massive amounts of money. The type of people that when they press send on their order, they move markets. Okay. They have a much greater understanding of what's going on than I do, and they're still buying. So what I'm trying to understand is why, right? You guys are like, whatever, like buy.
Yeah, I don't care. Who cares why? Yeah. We'll find out down the road, maybe not, and that's okay too.
Honestly, a lot of smart people are literally saying it's AI. Like there is a new, productivity revolution upon us, and AI is going to be bigger than the internet.
You know what I think about AI is cool, and I want to hear your take, Mike, because you're real. You're not like I've known Mike for a long, long time. He's a real dude. So I'm just curious to hear your take. When I started playing around with these things, I thought it was fun. Like I'm like creating poems and shit and like, rap lyrics and like I was having fun with it. I wasn't like going out of my way to like play with new technology like I've done with other things. Like it was just fun. I'm sending funny things to my friends. Like, how about you?
Yeah, so for me, like when there's something new and cool, I like almost instinctively reject it, right? Because it's like there's nothing about me new, there's nothing about me cool, and so these like new hip trends, they miss me. Yet I subscribe to ChatGPT, and for a lot of the stuff that I do, it's unbelievably helpful. Yeah. Unbelievably helpful. And then like more importantly, from a practical standpoint, the earnings guidance raise that NVIDIA gave is literally the largest ever. And that is your single tangible hard money gauge of AI.
Mike, let's talk about it because I came out here and we talked a lot about it 2 weeks ago when it happened. I told the guys, this is the best earnings report I've ever seen in my life. Like, honestly. Never seen anything like it. To be that big and to be growing that much still, this is insane. It's something Amazon's never done, Google's never done. I mean,
but see, it's all happening right now. It's like this last 3 or 4 months, it's all happening right now. Yeah, and so the next one to watch is Adobe after the bell. So you have Adobe Photoshop, and they have an AI image generator. So if you do any type of graphics, right, you're using Adobe Photoshop or some Adobe line of products. So they gave their Sensei product out for free, and now they're going to start charging for it. So I just wonder what we're going to hear after the bell. And the other one to look at is ASML, Without their equipment, NVIDIA can't.
Right.
The Dutch master.
So look, I want to hear more data points and earnings. And what I think right now is nobody can put their arms around. They can't assign a dollar amount to what AI is going to do. Okay, all you have is NVIDIA, and that's way beyond. Goldman Sachs is like they're going to increase revenue or earnings by 30%. Yeah, this is like 200 or 300%. So what's this going to look like for all these companies? And I'm hearing from my clients in tech sales that everyone they talk to is ultra obsessed about AI. There's massive spend. And so like until you can put your arms around this, you have people running in to get ahead of it.
Yeah.
And it's like everyone talks about just a few names being leaders. As JC has taught everyone over the years, that's every market, right?
Yep.
It's just a few names that are leading everything. So
I think you make a great point. Like what's being priced into 99% of these tech stocks right now that are going up on AI, they're not selling AI yet. NVIDIA is. They are actually selling the chips that other companies are buying to build out AI, products.
It's a good point that you just made, because people are always like, oh, Apple represents such a large portion, or these 5 stocks. In the Netherlands, ASML is like 25% of the entire fucking stock market. One stock. Like, if you stop complaining, people, it's way more obnoxious in other countries.
Yeah. Well, Mike, what are you saying? ASML basically supplies some inputs to NVIDIA that they use to make
massive equipment for them. They're them and Taiwan Semi, because NVIDIA. What's that?
Doesn't Taiwan Semi actually do the manufacturing?
I think so, but they're down the chain, the two of them, and like again, it's fancy and it's tech, so it's a little bit over my.
By the way, Taiwan Semiconductor, a quarter of the Taiwanese stock market.
All right, we get you there.
All right, Mike Lee, founder of Mike Lee Strategy. Mike, always a pleasure. Thanks for coming on.
Thanks so much,
Mike. You're the man, bro.
Take care.
All right.
Adios.
All right, right about this time is when we usually talk to Kimmy Sokoloff, find out what she's trading today. So let's get Kimmy on the show, see what's on her mind. I have a hunch she's gonna, just a guess, sitting on her hands before the Fed. Let's find out if I'm right.
She's gonna be shorting some of the best tech stocks.
Yesterday she did.
I know.
Hey guys.
Oh,
What's up, Kimmy?
What's up?
what are we shorting today, Kimmy?
Well, stupid me. I wrote in my note about Tesla as a short, and I didn't short it pre-market because I actually haven't been able. I guess they never had shares. TD Ameritrade would never let me short Tesla. So I tested out at the end of the day, and I was able to get shares. I didn't keep it on, but I just did like a quick short and then covered it. At the end of the day, I was like, wait, I could short Tesla again. So
Nice.
I wrote in my note. It was trading up at 264. I was hoping it would stay up. So it's already pulled back into yesterday's high. So now I have to watch it because I was hoping it was.
TD Ameritrade couldn't locate Tesla shares for you? That's
No,
what
it
you
could.
know.
It was
It's
a
just
while
for-
ago, and I haven't tried in a while.
Oh,
No, they just block it for their own risk management. They can do
Alright.
that.
What'd you say?
Brokers can limit, what you could short. They could change the margin requirements. They have the ability
Well,
to do
other
that.
people, same thing in the room too, but I just never tested it out. And I tested it out yesterday at the end of the day. I'm like, wait, I could short it? Because it moves better than saying TSLQ or any of those things.
Hold on. So a name that keeps coming up, Kimmy, is Adobe. I guess they're reporting after the bell. Is that the case? No.
No, it's the
Not-
15th. They report the 15th.
yeah, it's tomorrow.
Tomorrow.
Yeah, I shorted. I've been doing quick shorts in it. I shorted it yesterday for $3. I shorted, I think the other day early in the week. I don't know. You got to check. I shorted it a few times, but obviously I'm not touching it now. Reports after the bell. I mean, listen, for a name that's moved like this, it better have good earnings, right? This name should be the way it's been moving. It should be in the 500s. If the way it's been acting, otherwise it's a farce.
Well, remember, a lot of these companies are reporting killer earnings and just monster numbers. So they're all rising up in sympathy of like the Nvidia print and like some of these other names that are just absolutely ripping. So there's a lot of this built in. So for me, it's one of those things like there's so much good news already built in. Like how good could this freaking be? So I'm more. I don't really care about the news itself. I'm more interested in how the market reacts, obviously. But going into it, understanding that a lot of this is built in, like you said.
Right. It might be a good opportunity to short again, so we'll see.
Of course it will. You know, Kimmy's mean reverting strategy is so helpful and so complementary to all of the other things that I'm doing. It's just hilarious because I'm such a trend follower, you know, by nature. But then on a short-term basis, we could be mean reverting in nature. And it really is. And no one's better than you, Kimmy. Nobody's better than you. You're really killing it. So kudos to you. Talk to me
caught
about
that
the
little BYND yesterday, you know? I don't know. We caught that in the room yesterday.
Beyond Meat. So I was going to say long Beyond Meat.
And no, we traded it, and I'm not long it, and we traded GME in the room. All of a sudden it like ripped. I don't know what happened. It was like 25. It was around 26, 25.90. And I said, hey guys, this gets above 25.93. It could go to 26.50 and then 27. And all of a sudden it just went, whoop. I was like, okay. And people caught it in the room, which was nice.
What
Great
stock?
day trades.
GME.
GME.
So I feel like I don't hear you talking much about GME, AMC, like some of these meme names.
The garbage. So,
No.
you know, when you get the garbage rattling, I start to worry.
Got it. So do you think you're using the strength there as a sentiment indicator?
Yeah, I mean, they're garbage. And I let the room know, you have to remember, be careful. They could change on a dime and go against you. So take your money and run. You know, I'm not looking to be an investor in these names. You know, obviously this is my trading account, not necessarily my long-term account, but you know, I just don't you know, I don't stay long term. Either they're gonna go or they're not gonna go, and then I'm gonna jump out of the way.
And then what about this afternoon? Are you like how light are you going to be this morning, knowing you got this number?
Yeah, I'm gonna see how everything trades, see if anything we could capture anything. Otherwise, I'm gonna move along. I don't trade after the Fed. It's too whippy, too volatile. It's like why?
You let it settle.
Yeah, let it settle. I'll wait till tomorrow. I mean, hopefully I capture a trade or two in the room. US Steel's looking good, sitting right at the 200 day this morning. So I'm going to watch that. I got a little list. I got a list of 7 names. We'll see what comes up.
Kimmy calls these names her friends. These are your friends, Kimmy?
Yes. PJ, I do not trade options. No, I'm a stock jockey.
Yeah. But Sean sometimes takes her trades and uses options. I certainly do. And a lot of other people in the room do also. So you can take the ideas.
Some people in the room trade options off of my ideas. I'm just not an option person. So it's whatever you think.
All right. Kimmy Sokoloff runs a live trading room where she's going right now. She live trades the open and through the open every single day. If you want to get into her room, it's a premium service. You have to call us or email us with the stuff on information that's on the screen there. So do that and find out how you can get into Kimmy's room. Kimmy, thanks a lot. Always a pleasure.
Thanks, Kimmy.
Okay.
Good luck today.
Thank you.
I feel the need to tell people good luck always. Anyway, there's
luck has nothing to do with it. It's all skills.
Right. I know. But if I don't say it, I feel bad for some reason. Anyway, the results of our
sorry.
No, the results of our survey in the chat: aquarium or zoo? Zoo, 51%.
Wow.
Aquarium, 48%.
Close, huh?
Very
close call. It's a tough one, right? The audience agrees it's a tough answer.
Awesome.
I wonder if the audience would like it if we had software where we could easily vote for these things.
Yeah, it's on YouTube.
Right. Here we go.
It's on YouTube.
Let me ask you this. Can you throw up slide 1 there? Because this is interesting. Throw up slide 1. How's that look to you there, Mr. Strazza?
Yeah, fine. That's good.
You know what this looks like? It looks like the base in a lot of these like growth indexes, like internet, Dow Jones Internet, communications, all of these, right?
It looks like the chart of a risk-on asset. We're seeing a lot of this these days.
You know, and the dollar has had a very strong negative correlation with equities for quite some time. Strength in emerging market currencies, of all things, is not bearish at all. And just the fact that it looks exactly like the software index, the communications index, you know, a lot of these just sort of more risk-on sectors.
I think the bigger implication is, like you said, if this base resolves higher and is a valid reversal pattern, it's probably taking place in an environment where the dollar index is violating its pivot lows, probably getting oversold and accelerating to the downside, right? Following through on what looks to be a new downtrend for the dollar. And then what your point is what would that mean for risk assets? What are stocks and commodities probably doing in that environment? Probably an environment where prices are rising.
Here, throw up. Hold on.
I want to talk about jumping the breakout. I think that's a great question. Let's make sure we get to that. Eric's question.
Throw in the meta. Throw up the meta. Slide 1 there.
We're gonna do this during the street segment. All right.
Let's just do that then. Is Spencer going to yell at me for going out of order?
I mean, he should.
Am I screwing everything up, Spencer? How bad am I today?
You're horrendous.
Yeah.
Do you even know that John Netto's coming on the show in 4 minutes? Do you know that?
I only know that because you mentioned it earlier, number 1. Number 2, I have not looked at the document today.
Do you even care?
Nope. Clearly, I do not. I'm on vacation, man. I'm here at the beach. I'm going to the zoo today. I don't know if you heard. Daddy's taking the family to the zoo today, and I am stoked.
I would rather. All right, let's do meta now. But then we have like 5 or 6 tickers in the chat that I wrote down. So let's just save the rest of them for later.
Did you give me Fonz?
What?
The chart ninja.
Yeah. Oh yeah.
Fonz has the meta. Throw up the meta, Fonz.
All right, throw up the meta now, and then we'll do the. I wrote down like a bunch. We'll do the rest of them later. We already have the charts
We'll
for
talk
them.
about the analyst stuff later then.
No. I was saying that from the chat stuff. As far as the street moves, the meta thing, it was a positive note, but it wasn't like an upgrade, was it, from Piper? It was just positive commentary and maybe a price target.
It was price target rates, right? Like
right. Okay.
If they're already
they're
on the
already
stock,
at a buy. That
so
makes sense.
they upped the price target 270, 310. Not nothing, but it's really just like that's the bigger theme that we're seeing in tech. We have some other examples: Netflix, AMD. You're just seeing a lot of price hikes from the sell side. So go ahead, JC.
Well, this is a trade that Strazza loves. It reminds me of what Netflix, what was that, Q4 Netflix, going to Q1, kind of like you got those gaps sort of create these island reversals, and those gaps really act like vacuums. So this was the reason that we initially got long Meta, and it's really worked out in our favor. And we had that $300 target, at least I did, because that's what filled that gap. So, but the problem is, first world problem, but a problem nonetheless, is that I'm 70 points in the money in this name. So, and they expire on Friday. So, although I think it gets to 300, I own, so maybe I roll them in a few months. I don't know. I'm kind of in, I'm so in the money that I don't have that gamma and theta decay risk, right? It's really just a synthetic long in the common, right?
Something like this, you could keep riding it, right? You don't want to leave the trend early. And
they expire Friday. I'm running out of time.
No, I know you're talking about rolling into something and keeping a position on Meta. I'm just saying, look, the trend's great, but I have a lot less conviction in a name like this now than I did 100 points ago, just because of how far it's come.
Well, while the Fed is doing its thing and everyone's going crazy, I'm going to be at the zoo. And then when everything settles down, I'm going to see sort of reevaluate the situation. I don't have to do anything. I'm good. Obviously, it's not my only position. I got other things going on, but this is just something on my mind. And you guys talked to me about sort of like one of the sell side guys saying good things about it. It's not. That's it. That's what you guys were making a big to do about it. Some guy in Piper said something nice about Meta.
It's what we do on the show. We cover the morning news.
Is that big news these days? That some random Piper sell side guy said something nice about Meta? That's big news.
I think the point was.
I don't know what to tell you.
The point was that Meta was a stock that. Oh, look, there's the opening bell. Meta was a stock that people want to talk about. It was questioned in the chat, and there was also an analyst note today raising the price. That was the note. It was an amalgamation of things, combination. All right, 9:30. Let's bring on John Netto. We have an FOMC meeting, whatever, at 2:00 today. Announcement at 2:00. Press conference at 2:30. John Netto is going to be trading all that as it's happening. And as we've said, it's not so much about what happens, what they say about the rate today, but what they say about the rate going forward. Let's get John's take on all this. So, John Netto, welcome back to the show, sir.
Hey, John.
Great to be here. I will not be at the zoo today. unfortunately, like JC. So maybe I have to make some lifestyle choices so I can.
Listen, I work too hard, man. I need a day at the zoo, day at the beach. It's good. Dude, the zoo's awesome. I like how Netto, we this is like a recurring thing, coming in and talking about this stuff. I like, number one, just as an investor, right? I'm not like Mr. like Federal Reserve guy. Furthest thing from it, in fact. I'm more interested in being aware that there is an event happening. I think something that you sort of reminded me of when we first met before is that sometimes you're in a position and you're in a trade, and then all of a sudden the market starts going nuts, and you're like, what the hell's going on? But you didn't realize that there was some PPI report that the market cares about, or some non-farm payroll or whatever, because you didn't check the calendar, and you're sort of unaware. I've been in that position. A lot of investors have, so it kind of hit me where it hurts. I'm like, yes, that has certainly happened to me. So I really like the material that you're putting out, because it keeps me aware of events weeks in advance. And I know, okay, 2 Wednesdays from now, right? So it's kind of like earnings, like understanding what day a stock has earnings. So you're not too big going into that event or too small, depending on your strategy, just being aware more so than, oh, the Federal Reserve added 2 sentences to their friggin' statement or whatever, like, I don't know anything about that stuff. I'll leave it up to you. So that's number one. Number two, what do we do about it, right? Like, how do we make money from that, right? So, okay, great. Now we're aware. Terrific. So now we can't screw that up. What do we do about it? And the simplicity of it's gold, treasury bonds, S&Ps and Qs, buy them, short them, whatever it is, depending on what happens. Now we have something actionable, something to be able to execute on, not just the, too hawkish, too dovish, blah, blah, blah. Like, what are you going to do with all that? So that's my take on John Netto and the value that you bring. So with that grand intro, why don't you talk about what the hell is going on, man?
So this Fed meeting was set up. There was some doubt yesterday, as we touched on, that the CPI was going to ultimately determine the final nail in the coffin, is whether the Fed would do a hawkish hold and look to hike in July, or if they might even be forced to fast track or speed up the hike, which would be today. Given the result of the CPI, there was enough to keep the Fed on hold today. But this is what's unique about today's event, JC. And again, we want to stress this. Like, there's going to be a lot of illiquidity, or there's not much liquidity. Let me my English correct. There's not much liquidity at the moment of this release at 2 p.m. Eastern time, and we also need to be aware of a press conference ambush, because Powell comes on at 2:30 p.m. Eastern time and begins to take reporters' questions. He'll first read over the statement. He'll give some general comments, and then he'll take Q&A. And this is a point in time when he can provide some color, and that color is a little more important today.
And
because
you listen to all this stuff?
What's up?
You listen to all these questions?
I do. Yeah, because there's opportunity in it. You. Yeah, because we know that when it comes to certain policies, like how might they adjust, or quantitative tightening? When might they, maybe speed that up or slow that down? What does the Fed think about their long-term neutral rate of 2.5%? These are things that, like, the moment they come out, there's algos that are tuned into that hit the major market, and then guess what happens? They when these algos come and hit, that they have both stock baskets created, and they also trade the futures, but they go to where the liquidity is initially. And so if you're aware of these outcomes like you just talked about in terms of point number one, you can say, hey, listen, Powell speaking, he might come and say this, but then point number two is, if what he said is really is fairly inconsequential past the 30-second time parameter, there's some fade opportunities there. And given the granularity of options, which we see now, I mean, think about, JC, the options market and the development of it 10 years ago when you were trading, and Steve, versus the options you can trade today. In terms of that temporal or time dynamic, you can buy options expire on the S&P today. 10 years ago, buying options with daily expiries on the S&P was not a function that we had as traders. There was a little more of a theta calculation. Maybe you can buy something expired in 2 or 3 days from now. But the idea that there's a move today, post-event, on a Powell comment or on a statement perception that may be actually not consistent with what was substantively a part of that statement or part of Powell's comments, and you get a fade move, there's nothing to say that you can't buy the options the other way for, pennies on the dollar of what they were just 10, 15, 20 minutes ago, and play that move, because these moves can totally unwind.
Kind of like a lottery ticket trade, really, really cheap for the end of the day?
Right, but not lottery ticket odds, you know.
Right.
And that's
fair.
And that's what we
fair.
call running a business and creating edge. Okay.
Fair. Let me ask you this. So what sort of volatility is being priced in for this afternoon?
Consistent with last one, you know, you're looking at the straddle today is looking about 30 points-ish, 29, 28 points-ish in there. We'll see probably immediately after the release. It was 48 points yesterday. So we came in the CPI yesterday.
So what is that, 70 bips-ish?
Yeah, the S&P's at 4,200. Yeah, 70 bips, about 70, 80 bips, you know, and the CPI sucked a lot of that out. So I think that's a little light. I think there's some opportunity there.
This is compared to what a year ago? What was the market pricing in for an event like this a year ago? A lot more, right?
Yeah, nearly double.
Yeah.
Nearly double. But also keep that in mind. It's a function of the VIX as well. The VIX is sitting at 15 right now, whereas a year ago, you know, depending when the Ukraine situation with Russia hit, you know, in early February we had a VIX up near 30, but we had the VIX at 25. VIX sat at 25 for a lot of months last year, and so that was a part of this. So that has to be any analysis of what the straddle is today is taken contextually within, of course, where the VIX is versus where the VIX was. And the VIX is we'll just say materially lower at any point in time last year.
What's the trade?
The trade is going to be when the Fed comes out hawkish today, which I think they're going to have a hawkish hold. The market may, just from positioning, react actually dovishly. And that they may react dovishly on a couple of aspects. One, that the fact that the Fed doesn't adjust their long-term rate, which is kind of ridiculous from 3 or 4 years ago. Two, there's an expectation that the 2023 dot today for the Fed funds meeting 2023 dot should go up from 5.1 to 5.4. Whereas, you know, keep this in mind, a lot of the dovishness has been, or all of it has been totally wiped out of the June 23 versus January 24. At one point in time, 2 months ago, that was 70 basis points of cuts. That is gone. That is all gone. Okay. And so the perception is that the Fed's going to actually raise the Fed funds rate for 23 up from 5.2 to basically 5.4 today. And then that's kind of the decision. So if they don't do that, which may be more of a procedural manner, but still accompany that with hawkish language, we may get a dovish reaction. I think, in fact, we will get a dovish reaction to that because the market, you know, just positioning being what it is. And on that rally, after it's had a chance to exhale, I think that you buy puts on the things that have worked. In other words, you look to buy puts on fixed income, you buy puts on gold. If the S&P, you know, if tech, any sort of sell down on tech that doesn't come with some sort of material regime shift Fed change, you buy, because it's not the Fed that's driving the NASDAQ right now. The NASDAQ's being driven by AI and by cash on the sidelines. So
that's the divergence. That's the divergence between bond that we've seen between bonds. As part of the a big part of the divergence between bonds and tech is, you think, is the fundamental shift in AI. Like that's what we think now. Like that's a real. Everybody keeps telling me that. That's a thing.
Don't argue with the scoreboard, JC. Just don't argue with the scoreboard. The money.
Right. I know.
Right. I'm just saying more third person. Like this is the price action is saying that and the volatility is saying for now. And guess what? If this changes, the biggest shorts off of bubbles aren't from the highs. Okay, the biggest shorts off of bubbles are that sharp sell down, that dramatic failure, and then that lower high that follows. You know what I mean? That's where big shorts come off of bubble. If you're of the opinion this is a bubble regime, fine, okay. But to me, you know, trying to short Bitcoin at 50,000, then short at 60,000, short 68,000, brought you a lot of friggin' acrimony. You know what I mean? Like shorting Bitcoin once it couldn't break above 60,000, and you had a defined stop in place. Now you're dealing with like a year downtrend, you know, because you had fundamental factors that were there as well. And so if you're of the mindset that you want to, you know, get in front of this NASDAQ freight train, you can do it. And eventually you will call the top. You may have 80% less in your account when you do it, but like you may, you know, you could do that, but there will be price action.
Or do it short term. Like Kimmy, our day trader, you know, she's constantly calling out shorts, like even in NVIDIA on the gap up, but these are intraday. These are 20 minutes, half an hour, you get great swings. But what Netto's talking about is bigger picture. If you want to fade these things for a year-long trade, 6-month-long trade.
What John's basically saying, what I'm hearing as a technician, is the best shorts are after the trend has already reversed. Don't try to pick the top. Let the trend reversal take place. then you get short once you have conviction.
With a good risk level, which you just pointed out in Bitcoin. Great example, because it failed to break out above it. So you had your defined stop. So if Bitcoin had broken out, all bets are off. In fact, you might even go flip and go long the Bitcoin in that scenario, right?
Potentially. And so I'll merge what Strazza just said in terms of what Strazza said, sort of commenting on my thoughts, and that is that you don't short tops, but you can sell rallies in falling markets. In other words, so you have a market that on a longer term chart has made lower high, and now it puts in a spike off of some news event or there's some liquidity. That's the spike I want to sell. Okay. I'm making a new 52-week high spike. That's not the spike I like to sell. I like to sell the spike after there's a defined lower high or multiple lower highs from previous longer term charts, and then a shorter term spikes higher. Those are the spikes I like to provide liquidity on. Sell, buy weakness in rising markets, sell strength in falling markets. And right now the Nasdaq is not a falling market.
That's right.
No, I like what he said. Nothing material changes with this Powell guy, and tech sells off for whatever reason. You buy that dip.
Yeah.
So, John, it seems to me, at least for what we're paying attention to the Fed for, a lot of people are looking through to July. Looks like we might have, a little 25 basis point hike there. What are the things you're paying attention to in terms of economic data, events between now and the next Fed meeting? What are the things that are going to move Fed fund futures over the next month as we wait for the July meeting?
Great. Yeah, great question, Steve. So the heavy lifting stuff, most of it is done, but there are some outlier things that could gather some attention. One, we're going to watch the JOLTS reading. The JOLTS reading is actually it's been historically more of a tertiary or secondary a data point, but it has caused some just enormous moves, much to my surprise, because of how reactive the market has been. Number two, we have core PCE, personal income, which comes out at the end of the month. We'll keep an eye on that. We have non-farm payrolls the first week of July. We're going to, of course, have another CPI number. We have retail sales tomorrow. So we're looking at sort of a combo of growth and inflation data that's coming up, and all of it's going to be market moving. We just have to keep in mind that it's contextual to the underlying market volatility out there. So with the VIX at 15, we're just going to get less moves on them because the markets themselves are trading in a smaller range.
Yep.
All right, Netto. Always a pleasure, man.
Thanks a lot, Spence, Steve,
right.
JC. Good luck today, guys. Good luck at the zoos, JC. Enjoy that. Pet an elephant for me, okay?
Dude, sometimes I'll trade the FOMC. Sometimes I go to the zoo, depends on what's going on.
Fair enough.
And next time we have Netto on, he'll have his camera and his mic set up, and he'll look. I
like his sweet crib in Vegas. That's nice.
Life in the desert, my friend.
I like it.
Staying dry in the desert.
Yeah.
All right. Thanks a lot, man.
All right, guys.
Yeah.
All right.
Take it easy on John in the chat. He's going through a move right now. We're going to get him set up.
The dude just moved houses. Give the guy a break. Jeez. Yeah. All right.
It's like a sweet house. I mean, these houses in Vegas are huge.
Chart report?
Yeah. Hit it.
All right.
Trades here.
All right, here is yesterday's chart report. We'll start with the chart of the day, I guess, from Matthew Timpain, just showing the percentage of stocks in the S&P above their 20-day moving average, which we've been talking about. Breath.
Yeah, I mean, it's short-term strength in stocks, right? So, it kind of quantifies them more by showing that it's, stocks above their 20-day moving average, right? But, just go stock by stock and just sort of common sense. Stocks have been going up lately, right? So it's just another way to look at that, huh?
Yep. The one thing I wanted to highlight specifically was... there it is. The chart report is now even better. We got more ideas, more access, more content in our new product, the Chart Report Private Access. You have to click on the link into the newsletter to join in. And if you don't get the chart report, I don't know why you don't. It's literally free. It comes to your email every single day. Scan the code on the screen. Use the link in the description on YouTube. Get the chart report. It's free. It's awesome. And I read it every day.
The chart report is great because it takes you, 10 seconds to digest a lot of great information. Pat does a lot of great work, kind of looking through what the best technicians in the world are talking about every day and sharing them. And, all the quote of the day and stuff like that is always fun too. But the private access is very cool. The algorithm scans social media to try to find, big movers, and it does a heck of a job. And the idea flow coming from the buzz is, listen, we go out of our way here every day to find new and creative ways to get idea flow, right? The chart report private access through the buzz is a great way to find idea flow. I mean, it's a list of hot names, literally.
Yep. By the way, some of those charts in the chart report I'm no technician. Some of them take me like a whole minute just to understand what the hell they're talking about. You know what I mean? But yes, it's a great newsletter. It's fantastic. Chart report is free. Chart report private access is our new premium aspect of the chart report. Just get the free report, and then from there you can learn more on how to get the actual premium content. Okay. What did I want to do? I know we had stuff from the chat. We had no earnings today. We did the hot corner. We did that. Oh, we didn't do what's moving. Okay, wait. Let's do this. I want to talk about some healthcare stocks today.
Are you still mad at me that I took everything out of order?
Well, that's why I'm all...
We're going to do better tomorrow.
Healthcare stocks. Let's talk about it.
Healthcare is a big deal. It's a big deal.
Yeah. The CEO of United Healthcare made a comment at an investor conference saying that there's a lot of pent-up demand, I guess, post-pandemic for surgeries or procedures related to senior citizens, basically. So he kind of flagged that as a near-term headwind for the industry as a whole. So if you look at UNH, you look at CVS, look at Centene, Humana, they're all trading down. At least they were last I checked this morning on that comment.
Listen, what I really think is interesting is how little the medical equipment stocks care about United Healthcare. These medical equipment stocks are absolutely ripping. You see these things, Strazza?
Yeah, Spencer's telling me all healthcare stocks are down. The providers are down.
All right, sorry.
Selling in sympathy. What did they say? What was this news here? Because the whole space is
health. I should have said health insurance stocks. Is what I should have said.
He painted a bearish outlook for medical costs, is what I'm saying. That's it.
Yes, higher medical costs because there's pent up demand for surgeries and procedures now that we're past COVID. So more medical costs, being borne out by the insurers.
I mean, listen, a stock like this, you have pretty much never not been rewarded buying weakness in. These guys are just in such a powerful position.
You know what? No, bullshit. This is not where you want to be in healthcare.
No, it's not.
You want to be in medical equipment.
Yeah, but you can't.
That's not what he said.
But look at this chart, JC.
I see it.
Like, it's you can't tell somebody not to buy it, right?
First of all, I don't tell anybody what to do. I don't give a damn what people do. I'm telling you the way I see it. If you're going to be in healthcare, tell me there's a better. And what's interesting about healthcare, we talk about the diversification of industrials and how diversified of a sector that is. There's so much random shit going on in industrials. Healthcare, maybe not to that extent, is almost like that, where it's very diversified. You got your pharmaceuticals, you got your biotechs, your managed health, you got your medical equipment, which are essentially tech stocks, right? And they're acting like tech stocks, and they're moving, and they're pushing up against new 52-week highs. So medical equipment, the medical equipment index is pushing up against new 52-week highs relative to healthcare as a sector. So I think that's probably worth monitoring for sure. I think that's where you got to be. Am I crazy?
Listen, if you're picking between those two groups, nope, you're not wrong. They do look very different, right? I think we're getting a chart here for it, but IHF is the healthcare providers down 3.5% today. that chart just looks like a really big distribution pattern, right? And then if you look at something like what you're talking about, medical devices, IHI, it looks like a beautiful, rounding bottom reversal pattern. It looks a lot like software or tech.
And by the way, not all medical equipment stocks are created equally. Keep that in mind. If you look at something like, Thermo Fisher, or maybe something like Abbott Labs that has been struggling, then you look at something like Intuitive Surgical, and it's a whole nother beast. You want to talk about uptrends, happy new 52-week high, Intuitive Surgical, if you're into that sort of thing.
A lot of the big guys, whether it's Danaher, the ones you just listed, even Medtronic, the big boys in this space have been actually struggling. The relative strength is really, down in the smaller.
You were talking about it yesterday, Strazza, how like some of these bases that haven't broken out, like what's the use in buying the bases that haven't broken out when you could just buy the ones that already have and that are leading and sort of let them base and you buy the breakouts. Remember how we talked about that yesterday? Same thing in medical equipment, right? Like there's some that are basing, but that still haven't broken out yet. Like you look at something like a Medtronic, for example, still basing, still below the August highs, really hasn't gotten going. And then you look at Intuitive Surgical, is making new 52-week highs, right? And it's already broken out of those bases. It's the exact same thing you were saying yesterday.
Already hit its target. Yeah, you're saying you'd rather buy a continuation pattern in one of the stronger names. All right. I have something to say about healthcare too. Throw up these genomics charts. Let's start with the performance chart. This was one of those groups, biotech, where it was strong late last year, kind of helped kick off the rally. And then it's really been, dead money all year this year. Moving back up to the upper bounds of the range, whether we're looking at something like XBI or IBB, right? But what I'm looking at here is genomics funds. And we've thrown in XBI. ARC does a great job. And we talked about this, I think, when Sean was on last week. ARC does a really, really good job with their genomics fund. GNOM is, I think, the iShares genomics fund, and then Global X has one. IDNA, I might have gotten those backwards. But the point is, there are other genomics indexes out there. ARC's is up 25% this year. Some of the other ones are, negative or flat, unchanged. If you look at something like Equal Weight Biotech, up, 7%? I got bad eyes. Not even 10%. The alpha, from a biotech perspective, has been in genomics, specifically ARC's genomics fund. My favorite component is TXG. If you want to throw up that chart, it looks like it started to resolve higher yesterday, getting follow through today. This base is going. And this thing has been coiling so tight for several months now, right at the upper bounds of its base. Nice little bullish continuation pattern. Breaking out, you could define your risk perfectly at this 55 level. Got multiple touches since last year. This is how I would be expressing a bullish thesis in healthcare right now.
First of all, this chart is beautiful. Number one, that tight consolidation. I feel like just like literally before the show ends, buying a straddle, right? I think volatility will be cheap. I'm actually going to talk to Sean about that on my way to the zoo. I might be buying a straddle because think about that. Like there's a move coming. It almost looks like the stock's been bought out.
It was dead there, just tight, so tight, and now it's going to go. You'd think you would get a reaction here. Let me know if you guys.
Do you buy the calls or do you buy the straddle?
I'm in the stock. I bought the stock. Actually, I bought it months ago when it was at the upper bounds here. I thought it was breaking out. I'll probably buy more common.
Today. For sure.
Let me know what you guys are going to do.
Set up a call with Sean. Let's talk through that. I might be. I'm intrigued. By the way, are we going to? Sean says volatility is cheap. So, Sean, do we buy the straddle or do we just go long the calls?
Long calls. Go out.
Just along the calls. I feel like I don't know. Sean, is it too expensive to buy both sides, or do we just pick a side, pick a direction? I feel like we should buy both sides.
Let's just talk about it for recess. Just bring them on.
No, I got my own recess. I want to talk about langoustines.
Oh, Jesus. All right.
What?
Yeah, langoustines. Let's go.
No, all right, real fast. Let's do from the chat. There's a few tickers that were dropping in the chat throughout the last hour plus, and we have a couple of them ready. So let's do that right now, and then I promise, JC, we'll go to recess. All right. In no particular order here. CFLT Confluent.
What is this?
It's a chart. It's a stock from the chat.
Thanks. It's a $10 billion. What is it?
Software, package
$1
software.
billion software from Mountain View, California. Great music venue there, by the way. If you ever want to see a concert, it's a good spot. That's where Google is.
You have thoughts on this?
Yeah, I mean, exactly what Strazza and I were just talking about. Do you want to buy the stocks that have already completed their bases and breaking out, or do you want to buy the ones that haven't broken out? So this is kind of like that, the TGX, kind of very similar situation, long against those former highs. It's the same thing.
TXG.
Right.
Yeah. What's next? It looks good. These are the charts we're trying to buy. I wanted to go through that study. So we'll go through it tomorrow. But we quantified, how we made that list of the 4 characteristics we're looking for from a bullish reversal pattern. We scripted it into Optima, and we got all the numbers for which stocks check all 4 boxes.
This is too confusing for me.
All right, we'll simplify it and we'll do it tomorrow.
Am I dumb for just like not?
No,
this is too much.
We didn't need all the indicators in the box. We'll clean it up. We'll talk about it tomorrow.
It's too much.
All right, Carvana.
Listen, again, do you want to buy the bases that haven't completed, or do you want to be long the bases that have?
The squeeze is on in this name.
Is the short interest still obnoxious? What is it?
Yeah, I'm literally pulling it up right now. Give me 1 second.
So this at the beginning of the year when we were looking at these super high short interest stocks, Carvana was right up there.
Dude, 57%. It's just crazy.
So think about this, still 57%. So look at the initial thrust in January, right? Which is, we were talking about that in January, obviously. And then it's been basing ever since. Now we're exceeding those January highs and half the float is short. I mean, that's a lot.
Yeah, listen, don't be short this one.
Sean says he doesn't want to short the TGX. He says just buy the calls. I guess I don't disagree. How far out can we go, Sean? How far out can we go? Can we go to January, or even further? I don't know. Let me know, Sean. Can we talk about langoustines?
No, well, a couple more, real fast.
How about beef?
Let's rip through them.
Yeah, guys, we talk about this one so much. This one checks all the boxes now. It looks great. 850.
Yeah, 850. Above that, it's completing the base, right? It's the same thing that we keep talking about. It's the same story, just different ticker symbols.
This is one that absolutely checks all those boxes.
This is not that.
Nope, this is a buy on strength only type setup, and really that's the case with most of these energy assets right now.
This is small cap energy, Strazza?
I think so. No, but you're thinking ESCE. That's the sector. This is just a small cap energy name. This is a E&P name.
All right, last one. What do Joby? This was a SPAC.
Dude,
that
and there was some weird airline company on the under the hood list too. These weird new aviation companies. I don't know what's going on. Just buy Boeing.
It's an airport and air services out of Santa Cruz.
Yeah, it's like a helicopter Uber type of situation. The airplane. I don't know.
That's pretty cool. See, not all SPACs suck. This is bringing out a nice base.
It's below $10, which means it sucks.
Throw up the under the hood list for me.
First of all, just because it's under $10 doesn't mean it sucks. A $5 billion company, that's not nothing.
Put up under the hood quick.
I don't want to get into that.
Sun Country Airlines Holdings. Guys, I don't know what this is. SNC.
I do. I know what that is.
I wouldn't fly it. I know that much.
I'm flying them.
Dude, don't do that.
It's $1 billion airline out of Minnesota.
I'm flying them to Minnesota. I'm going to Minnesota in 2 weeks.
Sounds dangerous. Jeez.
All right.
I'll bet they have GoGo. I'll bet they have GoGo Wi-Fi on flight too.
Hold on.
I'll let you know in 2 weeks.
Hit the pumper. We gotta go.
All right.
We gotta go to the zoo. All right, Strazza, this one's for you. Throw up the langoustines. For me, these things are so expensive, right? They're like in the lobster family. They're like little mini lobsters, right? But they're so big, which is cool because I get to play with them and show like my kids and like make funny sounds and stuff like that. But the amount of meat that you get is like nothing. It's like less than nothing. And they're expensive as shit. I mean, so like, but they're delicious. Let me tell you, right? They are delicious, but they're so little. Is it even worth it?
Dude, so I've never done these, but I can imagine. I've been to 2 crawfish boils in the past month and a half. Same thing. You're sitting there, you're trying to break these things apart. I can't figure it out. People are like sucking on the claws.
But here's the difference. The crawfish are dirt cheap, and you eat 1,000 of them, and it kind of gives you something to do while you're drinking beers.
They're disgusting.
These are expensive as shit, and you get nothing. So at least the crawfish is kind of like, picking crab, right? Like, is it annoying a little bit? You get such little meat, but it gives you something to do while you're drinking beers, right? You got a beer, a whiskey, you got your crabs, and a ball game or some friends or family. It gives you something to do. It's like playing darts. But this is none of those things.
So I'm in the middle of sitting there eating my plate of crawfish, and somebody tells me these things come from like dirty fresh water. And I don't know, man.
What is dirty fresh water?
They're not from salt water.
Oh my God. Are you like Mr. Bougie now that you live in Key West, like Mr. Ocean Water, only ocean water fish?
NASDAQ Poppy said it looks disgusting, and I agree. Yeah, unlike you, I don't eat catfish.
For the record, they are not disgusting. They're incredibly delicious. For the record, my problem with it is just how little you get for the amount of money that you spend,
and the work.
There's no work. You literally just pick it out with a fork. It's easy. There's no work.
You don't have to like crack them.
They do it for you.
Is it crawfish or crayfish?
Crawfish. Yeah, New Orleans. Shout out New Orleans. New Orleans is a great town.
All right, Strazza, what do you got?
I got nothing.
Stuck ahead. Alex,
all right,
stuck ahead.
All right, I got something. According to Nielsen data, Bud Light was not the top-selling beer in the U.S. in May for the first time in quite a long time. You know what was? You're not going to guess.
Coors.
Well,
no. Modelo Especial.
Stop.
Modelos are like...
According to Nielsen, that's what they said. 8.4% of retail beer sales in the month of May were Modelo Especial.
Well, it seems like there's been a coordinated effort to get people to stop drinking Bud since that thing happened.
Yeah, but for Modelo, I mean, Modelo is a good beer. Don't get me wrong.
Right. Wow.
Jonathan, I love you. You could be vegan. You're welcome to not eat whatever it is that you don't want to eat. But on Stock Market TV here and on the morning show, we are hardcore carnivores. We eat all the animals that we can put in our belly. The more animals that we eat,
all the meat.
All right.
I'm excited about the meats.
We have the meats here on the morning show.
And on that note, we're done here. Thanks to Kimmy Sokoloff. Thanks to Mike Lee. Thanks to John Netto. Thanks to all of you in the chat, especially those of you in our YouTube chat for the comments, the questions. Drop us a like. Hit us up on Twitter. Subscribe on YouTube. Do all that great stuff. Reminder, FOMC at 2 o'clock. If you're trading, be aware of that. That's our show. Good luck today. Go make some money. We'll see you later.
Adios.
Run it. I can't take no loss. I don't need